At a time when Bitcoin is reaching all-time highs, it's difficult to discuss the potential risks and dangers that Bitcoin and cryptocurrencies may face in the future. And if we look at the profitability of the last year and the cumulative profitability of the last 10 years, Bitcoin far exceeds the profitability of benchmarks like the S&P 500 and the NASDAQ 100, which have historically attracted investors' attention. Just to give an idea of what we're talking about, Bitcoin's cumulative profitability over the last 10 years has been 39,900%, while the S&P 500 has achieved 261%, and Microsoft shares have achieved 1,200%. Given the scenario and euphoria investors must be experiencing, it's difficult to discuss the risks and dangers of investing in Bitcoin and cryptocurrencies with such tremendous returns. But history often repeats itself, and just as there have been historic bubble crashes like the dot-com crash or the tulip crisis, it cannot be ruled out that a tremendous bubble is currently forming with Bitcoin and cryptocurrencies, with unexpected consequences. The Bitcoin and crypto market exploded in 2024 when the SEC, the North American entity responsible for regulating and supervising financial markets, approved 11 spot Bitcoin ETFs, including IBIT, offered by the renowned asset manager BlackRock, the largest asset manager in the world. This approval was a turning point in the Bitcoin and crypto market, allowing many people to invest in Bitcoin and crypto with greater confidence. With these ETFs, investors can gain exposure to the price of Bitcoin without having to buy it directly or store it. And this possibly led many people to gain confidence in investing in Bitcoin and crypto, as they feel confident investing with recognized asset managers. Additionally, the fact that heavyweights like President Trump and Larry Fink, the CEO of BlackRock, are trading in cryptocurrencies gives people some confidence to invest, but it can also lead to a growing interest in the bubble, as some people need to increase their fortunes regardless of whether others may be trapped in the future. These ETFs are traded like any other asset on U.S. stock exchanges, where even institutional investors can invest. These spot Bitcoin ETFs have accumulated net inflows of more than $14.4 billion so far this year, raising $200 million in a single day. There is also much anticipation for the so-called Crypto Legislation Week, where alternatives for establishing the regulatory framework for digital assets will be discussed, including initiatives such as the Clarity Act, which would establish the entity that would oversee these digital currencies, and requirements for companies that operate these digital assets. This law would help reduce regulatory uncertainty surrounding cryptocurrencies and consolidate a regulatory framework to protect investors in these assets. The launch of these ETFs has caused Bitcoin trading volumes to increase tremendously, possibly causing the price of these digital currencies to reach a valuation that some consider irrational, and with several signs of being more of a speculative bubble. But to delve deeper into the reasons behind this assertion, we'll review the opinions of various market leaders, highly regarded individuals in the investment world who have managed to weather major stock market crashes and achieve profitability for decades. Specifically, we'll review the opinions of the great Warren Buffett, the greatest investor in history, Stanley Druckenmiller, the man who has beaten Buffett in recent years, Howard Marks, one of the best investors in history, and Jay Dimon, the most important banker in the world. Let's start by discussing Buffett's opinion. Undoubtedly the greatest investor in history. One of his first statements on Bitcoin and cryptocurrencies dates back to 2014, when the great Buffett stated in a CNBC interview, "Stay away from that. It's a mirage, basically." 4 years later, in 2018, Buffett was again interviewed by the same news network, stating regarding cryptocurrencies, "Bitcoin is probably rat poison squared." Furthermore, that same year, he stated that cryptocurrencies produce nothing and have no intrinsic value. He even went so far as to state that trading cryptocurrencies is simply insanity. Later in 2020, when asked again about these assets, he continued his stance, reiterating that he preferred to invest in productive assets. His last major statements about Bitcoin were for 2022, where he again stated, "If you told me you own all the Bitcoins in the world and offered them to me for $25, I wouldn't accept them." He argued that cryptocurrencies have no utility and produce nothing tangible, unlike companies' land or productive assets. His last statements in 2023 were not his own, but rather those of renowned partner Charlie Munger, who stated shortly before his death that the cryptocurrency craze was a collective illusion. While Buffett's opinions on Bitcoin and cryptocurrencies have been sparse recently, and in the past have been quite brief, it's clear that Buffett doesn't view Bitcoin and crypto assets favorably. He essentially considers them to be non-productive assets with no intrinsic value, and whose value is driven more by speculation. They are purchased in the hope of appreciation, without considering the benefits they can offer to society or the holders of these currencies. So, at this point, there are a couple questions that it would be interesting for some to dare to answer in the comments. Why does the greatest investor in history have such an adverse opinion of Bitcoin and cryptocurrencies? Why doesn't the greatest investor in the world have a significant position in his investment portfolio in Bitcoin or other cryptocurrencies? Why has the great Buffett not made any statements about cryptocurrencies and Bitcoin, either for or against, in the last 2 years? The second opinion we'll review is that of Howard Marks, the founder and co-chairman of Oaktree Capital Management, one of the largest funds in the world. He has assets of $2.2 billion and is recognized for predicting the bursting of the most important financial bubbles in history. He was able to predict both the bursting of the dot-com bubble in 2000 and the bursting of the subprime mortgage bubble in 2007. By 2017, Marks stated that he considered cryptocurrencies an unfounded fad. Explaining how the enthusiasm for Bitcoin could be a speculative bubble, he even asserted that crypto assets have no intrinsic value, going so far as to buy them with tulips and other historical bubbles. By 2021, Mark stated in an interview with Bloomberg, "I've learned that so many people believe in Bitcoin that it has real value. That's how fiat currencies work, too." But on the other hand, he also expressed that, "Fortunately, my skepticism about Bitcoin hasn't stopped my son from buying it. My son is much more open-minded about these things." In recent years, Marks has been a bit more cautious, preferring cash flow assets and acknowledging that Bitcoin could play a role as a speculative asset with perceived value. But in his latest letter, Marks believes that Bitcoin's 465% appreciation in the last 2 years is a sign of caution. Additionally, we mustn't forget that his fund's latest letter to shareholders, published at the beginning of the year, was titled On Bubble Watch. Bubbles are characterized by states of mind where not only is there a rapid increase in asset values, but also an extremely irrational exuberance, with absolute worship of an asset, with the belief that these assets cannot fail, accompanied by FOMO, or massive fear of missing out on the appreciation of these assets, and not falling behind the herd's tendency to buy to take advantage of the rapid appreciation. In bubbles, according to Marks, asset prices are not too high, and it is observed that co-workers or family members own these assets, which appreciate in value, so there is no maximum price at which they should be purchased. Marx recalled how there is nothing more disturbing to people's mental well-being than seeing a friend get rich and oneself unable to be in the business. For Marx, identifying bubbles requires more than just considering asset valuations, but also psychological criteria. Hearing that the price isn't too high, or that even if it is too high but hasn't reached that point yet, is a sure sign that a bubble is brewing. The big questions at this point, based on Mark's opinion, are, given the tremendous appreciation of Bitcoin and cryptocurrencies, is one of the largest speculative bubbles in history forming? And on the other hand, given the characteristics of the current market, where prices aren't too high to buy Bitcoin, is the bubble growing larger? And could it be that many people are buying Bitcoin and cryptocurrencies without realizing that the asset may be overvalued? The third position we'll review is that of the great Stanley Druckenmiller, considered by some to be the best investor of recent years. While Buffett achieved an average of 20% per year over 50 years, Druckenmiller achieved no less than 30% average annual returns over 29 years of management, without a single losing year. In a 2020 interview with CNBC, Mr. Druckenmiller confirmed that he did own Bitcoin and had some value in it as a safe haven instead of gold, stating that Bitcoin could be a very attractive asset class as a store of value. In a 2021 podcast, he expressed that, "I'm a bit of a dinosaur, but I own some Bitcoin because it's a brand." Along the same lines, he acknowledged that new generations trust Bitcoin more than gold, and acknowledged that it has brand power and an important narrative behind it. By 2022, he again stated in an interview with CNBC that if the Fed loses control of inflation, Bitcoin will become very interesting. By 2023, In an interview at a conference, he admitted he had sold Bitcoin, but acknowledged that he regretted not holding it. He also maintained his positive thesis on its long-term potential. At the beginning of 2024, he again stated that Bitcoin remains attractive as a scarce asset in a world with expansionary monetary policies. After reviewing the great Druckenmiller's position, there are some things that are evident. While he doesn't have as negative a position on Bitcoin as Buffett, it's also unclear whether he gives it intrinsic value or rather sees it as a store of value due to the lack of credibility in central banks and current currencies. But perhaps the most important question is if Druckenmiller, who has historically proven himself both an investor and a speculator, believes that Bitcoin does have value as a reserve currency, why doesn't he have significant investments in this asset? Or do we not know them? Or is it rather that the great Druckenmiller is waiting for a major correction in Bitcoin's price to take positions? The last opinion on Bitcoin and cryptocurrencies we'll review is that of Jamie Dimon, the world's most important banker and chairman of J.P. Morgan Chase, the largest bank in the United States. In 2017, Dimon stated at a conference organized by CNBC that Bitcoin is a fraud. It's worse than tulip bulbs. It won't end well. He went further, stating, "If we had a trader operating in Bitcoin, I would fire him in a second." Again in 2021, he referred to Bitcoin again, claiming it was useless and worthless, asserting that it had no intrinsic value and was an inflated fraud. In 2023, at a hearing in the United States Senate, he stated that if he were the government, he would shut it down and that its use was for money laundering and illicit activities. In 2024, Dimon stated at the World Economic Forum that he would no longer talk about Bitcoin and compared it to smoking, expressing that he did not believe people should get involved, but acknowledged that people have the right and freedom to do so. By 2025, due to client pressure at a J.P. Morgan Investor Day, he announced that the bank's clients would be able to buy Bitcoin, but clarified that it would be without custody. He reiterated that while people shouldn't smoke, he defends the rights and freedoms of those who wish to do so. However, he remains concerned about the use of cryptocurrencies for money laundering, human trafficking, and criminal payments. He also has concerns about excessive leverage in operations. Finally, and in conclusion, while everyone will have their own opinion on Bitcoin and cryptocurrencies, it is quite strange that perhaps those with the best track records in the investment world don't have such a positive opinion, and only a few see them more as speculation than as an investment. Remember that in the video description, you'll find a link to the best course for learning technical and fundamental analysis for investing in stocks. You'll also find a link to the best platform for buying stocks on the stock exchange, regulated in the United States. If you enjoyed the video, give us a like, subscribe to the channel, and share the content.